Myself Vaibhav. I welcome all of you to today's session of Market Movers, in which the focus is going to be on the equity segment of the market. Along with that, we will also consider the gold, which is considered bullion. And if we look at the market for the day, we are seeing mostly sideways momentum prevailing. So there is no major move, and of late there is a downside shift in the Euro USD, but apart from that, the day has been kind of silent for the financial market. So let's see what's happening in the financial front. If we consider the data docket for the day, earlier in the day we got the multiple data points for the United Kingdom, and here the key release was of course, the preliminary estimate for the fourth quarter GDP growth rate, and as expected, the growth rate is in positive territory, but it has cooled down considerably compared to the third quarter. So for this quarter, the quarter-on-quarter numbers stand at 1%, and is slightly better than the expectation of 0.5%. At the same time, other economic releases also came in, including the industrial production, business investment, manufacturing production, construction output. So I will not really go into the details of these, as these are there widely available, so you can go into the fine print of that. But the message is that we are seeing some recovery, albeit at a slower pace in the United Kingdom's economy. So that is the takeaway. And moving on to the North American trading session, we are scheduled to get the University of Michigan consumer survey data. Here also we will be getting the multiple data points, including the current conditions, inflation expectations, consumer sentiments, and also the 5-year inflation expectations. And for this month of February, the estimate is that we are likely to see some improvement in the consumer sentiment on the back of wide rollout in the vaccination for the COVID-19, and that is going to lift the sentiment somewhat. This is start of this vaccination phase, and we will have to give a couple of months more. But in due course of time, by the second half of this year, we can expect the US economy to be in a lot better shape, and we will see that being reflected in the expectations also. Now, moving on to the technical segment, we will first see what's happening in the Dow Jones Industrial Average, and as I said, we will also be going into the details of gold's technical analysis. Let's start with the Dow Jones Industrial Average first. This is the daily time frame chart, and yesterday's close was the record close for the Dow Jones Industrial Average. And for the day so far, of course, the markets are still to open. I'm talking about the future markets. We have seen slight correction, and if we consider the equity indices in European Union, and the Asian majors also mostly traded slightly negative, not much decline either, but the tone was slightly on the bearish side, and that shouldn't be surprising given the fact that we are trading on the lifetime highs for many of the equity indices. So some sort of correction from these levels shouldn't be unexpected, or can't really be ruled out. And even I feel, as this consolidation is also showing, that bulls have kind of exhausted themselves, and we are likely to see some sideways momentum with buyers turning bearish in the short term. So, from intraday perspective, we will be considering some key levels to watch out for in today's session. The major marker for today's session is going to be this immediate high, yesterday's high, which is there closer to 31,500, and anything below that, we can be hopeful of further deep on the lower side towards 31,200 or even below it. But if we do get the breakout above this yesterday's high, then I think we should step back and allow the rally to again run on the higher side. But as the sentiments have prevailed for most of the time in today's session, I am expecting this momentum to subside a bit, and rather than bulls taking charge again, I am expecting the bears to show some courage and maybe try to push the Dow Jones Industrial Average lower. In near term, we have these major resistance in place around 31,800. So for the time being, the price action is caught in between these two levels, and we had a breakout in the earlier part of this month, and that had given the reason for more market participants to jump in and push the Dow Jones Industrial Average higher, and that has happened. The regression curve is also still inclined on the higher side. So because of that, I'm not majorly bearish on the Dow Jones Industrial Average, but from scalping point of view, we can do take some chances where the entry point can be in between these two SMAs. The green one, the higher one is 50 SMA, and the lower one is 100 SMA. 200 SMA is far away, and as I said, in the near term, the price to watch out for on the lower side is going to be these price around 31,200. We have these multiple swing lows where we saw the Dow Jones Industrial Average finding some support on the lower side, and on the higher side, this double high kind of formation is there. Even in yesterday's session, we saw sharp decline after the prior high was reached, and even from the lower side, the bulls didn't really relent, and again the buying came in and eventually got the Dow Jones Industrial Average closer to its highs. But as the things stand, I am now more hopeful of further break on the lower side. Of course, we don't really have the breakout just yet, but still looking at this chart, I think the probability is good enough where we can keep the stop loss just little above the immediate high. So stop loss can be kept closer to 31,600 for the entry, anywhere closer to 31,400. And on the lower side, the price of around 31,200 or even below that can be expected. And if we do get the breakout, then eventually 31,000 can be ruled out. So here the risk reward ratio is just little better than, just little over 1 is to 1. Not exactly great, but from scalping point of view, that should be good enough. Or if you are patient enough, you can even wait for the decline to deepen towards even 31,000, which I think can happen in next couple of days. Now moving on to the bullions. Here we will take a look on the gold. Gold has shown reversal after getting closer to the USD 1852 per ounce level. We had this Fibonacci retracement of 38.2%, and after that the reversal has been fairly sharp. Even in today's session, the momentum has been bearish, and I think now the next target can be worked out closer to these immediate swing low, which is there around US dollar 1,780 per ounce. So the question becomes, what are the optimum levels to watch out for if we are going to look for the bearish opportunities in the gold? And for that, we can rely on this consolidation where we had seen the gold remaining in the range within US dollar 1,830 on the lower side and around US dollar 1,850 per ounce on the higher side. So for immediate concern, we can utilize this consolidation phase range. And I think as long as gold remains below these prior swing lows around or just little above US dollar 1,830, we can be in we can expect the correction to continue and further move toward this first support of this month's pivot point series can be expected. And on the higher side, the major zone to watch out for is going to be this central pivot point around US dollar 1870, but that's almost more than 2 percentage point away, so that's not really in play in today's session. For today's session, these prior swing lows of this consolidation phase should be good enough. And to pinpoint the entry and exit point, I think we can look for the entry, short sell entry, anywhere closer to this confluence zone of 50, 100, and 200 SMA. Anything below this should be good enough. Right now, we are almost 15 USD per ounce away from those desired area. But if we are fortunate enough to get the entry closer to this zone, then that reduces our risk, as we will have to take the risk of only 15 to 20 USD per ounce. And I think the stop loss anywhere closer to this high, the yesterday's swing high, should be good enough. So as long as the price action is happening below this resistance zone of these three SMAs, we can we can continue to look for shorting opportunities. Right now, the risk is going to be a bit higher, as we will have to keep the stop loss wider of around 30 USD per ounce. But as I said, if we are fortunate enough, or given the fact that today is a Friday session, we can even decide to sit on the sidelines, and by the time we come back on Monday, maybe we might get a better entry point. And the technical outlook is not really going to change unless we see any sharp move beyond this resistance zone. So as long as price action is below it, we can take our chances. So that's it from my side for today's session. If you have any query or any idea to share, you can write to me in the feedback section, and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while utilizing the information provided. Have a fabulous day ahead and weekend. See you on Monday. Do subscribe to the Ducoscopy webinar channel. Goodbye.